Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for September 12th, 2021. You know, I'm actually filming this on September 11th, and this is the 20-year anniversary of the most horrific attack ever on US oil. And I just wanted to say that for those of you that were personally affected by that event, I want to give you our sincerest thoughts and prayers. And for those of you that were first responders in that event, hats off to you. We owe you a debt of gratitude. And let's just all hope something like that never ever happens again. Not in our lifetime, not ever. And as an American, I will also say we will never forget. So today you guys are actually in for a real treat. We have Grega Horvat, which is our Elliott Wave analyst for the ForexAnalytix platform. He's going to be joining us today. He's going to give you his view of the market. So I'm really excited about that. But I need to mention that if you haven't tried out ForexAnalytix, try it out. It's only $1 for 10 days. You know, you can download the mobile app, no matter if you're on the light or premium version. You get to try out the premium version. You get to listen to all of the live analysis videos that we do throughout the day for the ForexAnalytix subscribers. You get in the chat room, you get the mobile app, you get all the analysis for $1. And even if you decide to go with the light version at the end, which is only $19 a month, well, you still get to listen to all the live analysis for all of our traders throughout the course of the week, and you get the mobile app too. So make sure you try it out. And I also have to mention before I turn it over to Grega, hey, you know, next week is going to be a pretty important week for the Fed. We have inflation data in the US. We have inflation data out of Canada. We actually have retail sales out of the US this week. Also, like I said, we have inflation data also out of Canada. We have Australian employment, New Zealand GDP, and retail sales out of the UK. So really, there's a lot of data coming in this week that could influence the Fed as we come up to the FOMC meeting on the 22nd. So enjoy the analysis with Grega Horvat, and I want to thank you all for joining in with us today. Make sure you give us a thumbs up if you like the video. Make sure you subscribe to the channel so you don't miss any of our great content when we put it up on YouTube. All right, enjoy.
Hello traders, hello everyone, and welcome to our new week ahead video in which I will cover a lot of markets, particularly focused on the currencies based on the Elliott Wave principle. So firstly, let's touch the euro here. Now, euro on a higher degree time frame chart, in my opinion, is still bearish, especially as long as we are trading below this long-term trend line resistance. So I'm actually observing two interpretations for wave B. Either we are here going to see a triangle scenario if the market will see more weakness here towards the end of the year, let's say back towards 1.12 area, or maybe is this wave B going still to be made by three subwaves where resistance would then be around 2018 highs. So for now, both scenarios are still valid, but looks like that in the short term, based on these two interpretations, we could see some kind of recovery. Now, let's assume that we are in triangle, as I mentioned. Well, triangle has each leg structured in corrective formations. So even if this is wave D, well, you would be expecting more weakness, right? Because normally wave D will move towards the lower side of this triangle range. But in such case, my assumption is that this could be then ongoing 7 swing correction, ABC, wave X, and another ABC now in progress. But even if this is somehow bearish development, well, wave B that recently bounced from those supports here is still incomplete. So wave B is a corrective leg, meaning it should see more upside here, even if this is just temporary recovery. Okay, so that being said, I'm expecting here this wave B to see more upside, meaning more euro strength, at least in the short term. But then I also have the second wave count where I said that maybe we will revisit those 2018 levels. In such case, I would label this retracement from start of the year as wave 4. Maybe already completed wave 4 because we retraced back towards 38.2%, also back into this wave 4 area of a lower degree. So it makes a really nice corrective retracement. So even this one suggests more upside, but ideally in impulsive fashion. So impulses are made by 5 waves. So even if we are going to see more upside in the near future, we are either going to see a 3-wave rally for wave B or even a 5-wave extension for a wave 5. So in either case, I'm expecting more upside here. And to go to even lower time frame charts here, to give you the reason why I think that more upside could be coming, is because the drop here on the 4-hour time frame charts since end of May is in 5 waves, and we recently broke this trend line resistance with quite sharp price action. So in my opinion, we could see more upside here after this current pullback in wave B, or maybe even wave 2, with a nice support here around 1561.8%. Maybe also some kind of a head and shoulders pattern with the right shoulder now coming in play here. But obviously for this one to be aggressive on the bullish side, you will need a broken neckline. So for now, even if we are bearish or bullish on euro dollar, I think that in the short term we can see some supports here for euro dollar, meaning that even corrective rallies could extend toward higher prices, okay, as long as the market is trading above 1.16 level. Now let's take a look also on cable. Now cable here on the monthly chart, we recently came out of this trend line. Okay, so it looks like that maybe there is room for more upside here, maybe a revisit another time for this wave 4 levels here from 2018's highs. This is definitely possible, especially if we consider that this recovery here can be impulsive and still incomplete. This is wave 1, you had a wave 2 flat, and then very nice 5 waves up for wave 3, and now it looks like that this is consolidation. Unfortunately, sometimes consolidations are very tricky. They can be complex one, they can be simple one, but this one appears to be a very complex one, so there are different valid scenarios. But for now I'm trying to focus on a triangle here. Well, triangle is a ABCDE pattern. So looking at this structure here, we maybe already completed wave E down here, or there will be another retest of this 1.3726 level. So as long as we are holding this trend line support, keep in mind that wave 4 or hold this triangle can be a little bit more complex. Okay, a daily close above 1.39 level would probably make this a very nice breakout, maybe finally out of this range. If suddenly market comes back to the downside and breaks the 1.36 level, then I think that wave 4 will be deeper rather than more sideways in time here. How I know that market is sideways? Well, if you look here at this moving average, this is the daily chart, you can actually see that this one is flat. Okay, you can see that line is moving only to the right, not to the downside, not to the upside. Now even 50 period moving average in orange is somehow moving to the right, okay, for the last few days. So it appears like another consolidation phase. But then you have this 200 simple moving average, which is not moving to the right, but rather still pointing higher, meaning that higher degree trend is somehow still in bullish sequence here. Okay, so that's why I'm actually observing this to be a wave 4. Now let's take a look also on Aussie dollar. Now Aussie dollar monthly chart, I've been talking about this chart a few times in the past. I will cover it once again. Always after a sharp sell-off, especially during recessions, we have then later seen a recovery in 3 waves. This happened here after dot-com bubble, a 3-wave recovery, then Great Recession, another 3-wave recovery, and then you have a COVID crisis. After a very nice strong drop, we are seeing very sharp reversal, but so far only with 3 waves. So if we respect the past price actions following these recessions, then I think that there can be more upside coming here after this current pullback. What is also interesting about Australian dollar is that you have 5 waves up here with an extended wave 1 here in the first leg from last year lows, and then we have seen even more upside after this retracement in a wave 4, and now we are seeing a big pullback. Notice that the big pullback took us back to the area of a former wave 2, but still with 3 waves. I know that we have seen some nice recovery here over the last few 2 weeks, 3 weeks, but you definitely want to see an overlap with this wave A to make this chart looking even more bullish. Why? Because let's assume that this is wave 1, wave 2, wave 3, and you are now in wave 4. Well, wave 4 should not step into the territory of a wave 1, right? So in such case, an invalidation of a bearish impulses would actually make these bullish interpretations with an ABC drop even more valid, of course. So for now, I'm expecting that Aussie will sooner or later pick up. Keep in mind that we are now also seeing Australia somehow projecting a top for their COVID cases, COVID situations. So in October, I think that things will turn to be much better. It was very similar timing, and also a peak in COVID cases here last year in August and in November, where actually they removed the lockdowns and the Australian dollar were able finally to move to the upside. Okay, so I'm looking for something similar again to happen here this year. Okay, looking at the 4-hour chart, we are seeing a very nice reversal here to the bullish phase, and this appears like a very nice setback right now. Now the support is around 70-90 area, especially maybe some kind of, again, head and shoulders bottom formation here. Also, let's take a look here at copper. Now copper is also some kind of very important commodity whenever we are tracking Aussie. They tend to have a positive correlations, not always, of course, nothing is 100% right, but it appears that if we see more upside here on copper, this could be positive for Aussie. Here I'm seeing potential bottom formations after this very nice rise here, followed by 3-wave setback, and now you are at the neckline. We also finished the week higher here, so my assumption is that we will see more upside in the next week. Now let's take a look also on New Zealand dollar versus US dollar. Since we are covering Aussie, let's take a look on this correlated commodity currency as well. Now here, big picture, I think it's a very clear. We are seeing a nice bullish turn here from 2019 lows, and this appears to be like a corrective counter-trend movement, maybe very nice bullish flag here that is pointing higher after a breakout. Now looking at the 4-hour chart, clearly I cannot count this impulsively, so in my assumption this is a correction. We are now, let's see, we are now here at this trend line resistance, but I'll assume that we could see a breakout higher, especially because this rise appears to be impulsive. Looking at the 4-hour chart here, you can see a very nice and strong reversal here to the upside. So my assumption is that this could be actually maybe already finished wave 1 and you're now in a wave 2 pullback here. Now very nice support is around 70-60 area. Okay, so as long as the market is trading above that invalidation level 68.05, I think that this trend remains valid here, but definitely looks like that there will be lower supports retested. Why I think that lower supports could be retested is also looking at the daily chart here, candlesticks formation, somehow bearish candle right there. Okay, so this makes me think that we will see a retest maybe of this previous doji low, and then maybe a final stabilization, which makes sense with an Elliott wave principle in mind, where I'm expecting wave C here to complete wave 2. Now let's take a look also on gold. Now gold here is definitely moving sideways, trapped in this range, which in my opinion belongs to ongoing bullish sequence, looking for wave 1, wave 2, nice wave 3, wave 4, and expecting higher for a break higher into wave 5 after this consolidation will finish. Ideally, this consolidation will be unfolding as a triangle. Okay, you have wave A, B, C. Ideally, we are now in wave D. Now, wave D could see the retest of this trend line. Why? Because on the 4-hour chart here on the right, you can actually count 5 waves up, ending diagonal in wave 5 of A, and now you're in a pullback. Now, very nice support could be around 1740 area. That would be ideal for this counter trend movement to be completed, and then I would be looking for more upside. Of course, only temporary for wave D, because triangles are made by 5 subwaves A, B, C, D, and E. So another leg will be expected after potential rise for a wave D towards this trend line. Also, let's take a look at silver at the same time. Now, silver on a monthly basis, I think it's showing us a potential bullish setup here. We were seeing a very nice failure break to a new low and a very decisive break above the resistance here. So this appears to be like a bullish sequence, especially if we consider just the basic technical analysis. And then you have also Elliott Waves, where this first leg clearly was made by an impulsive price action. And now you can see clearly that this market is just moving slowly. So in my opinion, this is like a correction on the way up. But corrections sometimes, as I said already earlier, can be a little bit more complex and tricky. So I'm tracking 2 of them. Now, first is that we could see here a triangle, especially if this trend line resistance would be broken. I posted this one on Twitter and I said that we are at the important trend line. We haven't seen this break higher, so for now we definitely have to keep in mind that maybe this trend line will stay in place, meaning that we could see more weakness. If that would be the case, then this wave C would be as an ending diagonal down from that spike high. So an ending diagonal could then complete this complex correction below these wave A levels. Okay, so I would be looking for something similar on the opposite side. So here, back in this was back in February, March, we have seen a spike to a new high just for a few ticks, and then downtrend begun. And maybe we'll see something similar here on the opposite side before market turns bullish. But overall, I think it's a very nice, good looking wave structure, suggesting more gains after another dip. But if this trend line is going to be broken, then as I said, maybe this whole consolidation that is already underway for more than a year now could still be a triangle if this trend line is broken. Okay, now let's take a look also on crude oil. Okay, now crude oil here is clearly in bullish mode. I'm actually on a higher degree time frame charts. I'm observing 2 wave counts. Either that was a wedge pattern and now we are breaking out, or maybe this was an ABC drop and you are again breaking out of this downward channel placed in wave C. In either case, I think that more upside here will come after retracement. So far, we already have seen some very nice retracement, but not that big or long in time, I should say, especially if we consider how strong the recovery was, and quite long in time. So I'm aware of potential more complex correction here, meaning that this current rise and reversal to the upside that we are seeing can be still only maybe way B of a flat correction, and you will see a drop later on. But what is what I love about the Elliott wave theory is that even if I have somehow maybe mixed signals for, let's say, for the next few months, or maybe even bearish, well, there is still a bullish interpretation in the short term, suggesting more upside here from current levels. Why? Because when I'm looking at the 4-hour chart, notice the drop was still in 7 swings, meaning it was a correction, either wave A as labeled here, or maybe already as a completed whole corrective drop and we are going back to the highs. But in either case, a reversal from the lows was a very sharp one. You can see also broken trend line resistance, meaning the trend is has turned bullish. And then you have this very slow choppy price action. This appears to be like an ongoing consolidation. Very slow price move in limited range compared to the previous very strong reversal and extended price action. So this is correction while this was an impulse. And if that's the case, then we know that market should break out of consolidation, probably will continue in the direction the first previous impulse, which, as I said, was to the upside after this 61.70 low. So in my opinion, there is a chance for more upside. Of course, $67 is the perfect support. Maybe even 65 is the area that we should be observing if we suddenly see a break lower here. But overall, I think that this is consolidation that sooner or later will take us higher. Now, if that would be the case, if crude oil will come to the upside, then I think the dollar Mexican peso is going to see more weakness. Now here I have a very nice looking triangle. I've been talking about this triangle for a while, and I think that this bump is sticking here. A break, we are now at this trend line support, but break and daily close below 1970 could really cause an acceleration lower here. Now looking at the 4-hour chart, notice that that was a very nice first drop for a wave 1. You had a wave 2 and then an extended drop after this broken trend line makes things very possible to be impulsive to the downside. So you're now in consolidation phase and expecting more weakness. Now this dollar Mexican peso is doing quite well despite this recent sell-off that we have seen on Friday and Thursday on the US stock market. So now imagine if the stock market somehow will try to stabilize, I think that this breakdown is coming here, especially if I have in mind this crude oil interpretation. Now let's take a look on dollar yen. Now dollar yen here is consolidating. I think that we could still see more upside here. It's very tricky because of dollar and Japanese yen battle based on risk on, risk off sentiment, but overall I see this as a corrective movement. Sooner or later we could see more upside. Now daily close above 110.80, I should say, could actually see or bring more upside here for a wave 5. Now whenever we are looking at dollar yen, of course, and we are seeing things moving sideways here, maybe it's better just to observe and stick to yen crosses. Now looking at the yen crosses here, I have this overlay chart. Well, here you can see that obviously somehow all of them are moving in the same direction, but what I want to check which one is the strongest. Okay, so I have a percentage here and you can see clearly that low was in August here. So I will now scroll back to the starting point. Okay, and you can see that at the top are this is New Zealand dollar versus Japanese yen, and then you have Aussie yen. Okay, so I think that these two are probably going to be the most attractive if these yen crosses will really continue higher, if we see risk on also turning up as well after this Friday sell-off. So I will take a look now on Aussie yen and New Zealand yen real quick here. Now Aussie yen, I'm looking here at the daily chart. Very nice break potentially out of this bullish flag, so I think that more upside here could be coming after this after pullbacks. I don't have an updated wave count here, so I will be looking for more upside here. Also, let's take a look on New Zealand dollar versus Japanese yen. Well, on a daily chart, very nice free wave drop, broken trend line, so it looks like a bullish breakout, but again after our retracement. Now very nice support would definitely be here at the potential trend line, where a broken trend line resistance can become very nice support line here. Okay, now let's take a look what we have else on the list here. Well, let's take a look on Bitcoin. Well, cryptocurrencies, as you know, they have seen a very strong sell-off, and we've been looking at the charts where suggested that we are seeing limited upside. Now, firstly, let's take a look here on the big scale. This is a weekly chart of the Bitcoin versus the US dollar, and notice that very nice recovery always occurred after 70 to 80% of a pullback. This has been the case here in 2014. It has been the case here in in the middle of 2018. Okay, then a bottom at the end of 2018, and then you had this in 2019 again. 70% of pullback. As I said, here in 2018, it was 80% of pullback. Here was 82% of a pullback in 2014. So if we respect that after that sell-offs, there can be much better opportunity, especially if you're going to hold investment, let's say, for a few years. I think that these are percentages that we should look for. So for now, I'm not seeing this kind of a pullback based on these percentages. So I'm still aware of potential more weakness, or at least I will wait on this kind of development if I want to be invested longer term. So the very nice support here would clearly be after this, let's say maybe 70%, and this could come in around 20,000, maybe a little bit lower. So this is a perfect potential also round figure which could limit the weakness here. Now, and if we take a look also on this chart here from an Elliott Wave perspective, the latest developments, what is probably the most important for me and why I somehow doubt that we could resume straight to the upside from current levels is because I can count 5 waves down. Okay, so each 5 waves down from new highs or 5 waves up from a new low is a potential reversal structure, and that's why we have to be very careful here. So just be aware that there can be more sell-off coming, especially as long as we are trading here below this recent peak. And this was also at the 61.8% retracement. So I think that there is a risk that we will see more weakness, and even if I would somehow try to turn bullish here, still I would be expecting at least 3 waves drop, meaning still more weakness in the short term, right? Also looking at this chart, okay, I have here Bitcoin futures is somehow this gap check map. Okay, always when gap, not always, but usually when gap occurs, market resumes in that direction away from the gap, but then sooner or later they will try to bring prices back into this gap because of unfilled orders. So this has been the case here a few times. We even recently retraced back into this very important gap from May, and what I see is still a very important one open here. This also is visible on the September contract here on from July. Okay, so I still think that maybe, I mean, I would not be surprised if we see a drop back into this area. But even if, as I said earlier, even if I would say that this is not a counter-trend movement and we are not going down, but rather will stay in bullish phase, well, I would label this probably like that. Okay, so this is then still a 5-wave movement, and after every 5 waves, what would you expect? Well, a 3-wave setback, right? So I'll be looking for an ABC retracement then. In such case, the supports that you would probably pay attention on is the first one here around 41,000, and then you have around 37,000. Okay, so that's the area where I would be looking for a new reversal higher. Okay, so even if I am looking at different interpretations, of course, I'm aware that I could be wrong with the bearish picture, and maybe we will turn bullish after this pullback. So what I'm doing here is just observing the price action, just to realize that market could always continue in either direction. But for now, at this stage, I still think it's quite risky to be long from current prices and rather wait on a dips. Okay, traders, I hope you enjoyed this video, and see you again next time. Bye.